Okay, I'm going to show you guys the strategy that made me profitable. I'm also going to show you how I actually came up with the strategy. Hopefully that will give you guys a little bit better look on how the strategy actually works. We're going to get straight into it. So when I first got into Forex, everybody always told me never trade reversals, always trade continuation. A lot of you guys also ask me, why do I trade reversals specifically? I don't actually trade reversals, I trade continuation. But what's happening is in the market, there's always a continuation, there's always a reversal. I'm going to show you exactly what I mean by that. Stick around to the end of the video, and I also have another tip to show you that will help you with your trading a lot. So if you guys have any other questions, hit me up in the Discord. Link will be down below. Okay, so what exactly do I mean? Well, I'm gonna quiz you guys really quick. So we're here on the whiteboard, and I'm gonna ask you guys right now, do you think I should buy this trade? Or do you think I should sell this trade? Think of it right now. If this was a chart, right? Do you think I should buy it, or do you think I should sell it? Now, a lot of you might say, well, you should sell it because continuation, go with the trend, right? So you would place, like a nice sell right here, and you'd want it to go down, correct? But then you need to keep in mind the higher time frames. So if I were to scroll out, as you can see, we are in this, this nice uptrend right now. So like, why would I sell right here? Why would I sell right here? It's clearly in this nice little uptrend, and we're gonna keep going up, right? And now, this is where it comes again. This is why you always need to look at your higher time frames. Because if I scroll it again, as you'll see, now you can see even more of a bigger picture, right? So now, why would I buy, right? Now, a lot of you might think, okay, why would you buy here? Clearly in this nice little downtrend. So the sell was actually the better option. And this is why you need to focus on the higher time frames. So always look at the bigger picture just to get an overall direction. And now, the reason I came up with the strategy and the reason how I came up with the strategy is because I always told myself, okay, what I want to do is I want to trade these high time frame moves, because I notice on the high time frame, these moves can give you like 100 pips. But if I were to go to like the 5 minute, each kind of move only gives you like 11 pips. So I thought to myself, how can I get the most optimal entry? And then I realized that I need to trade these little pullbacks. So price is in an uptrend, and it has this little pullback right here. So the best optimal way would to be to trade when this thing takes off. Well, how do you know when this is going to take off? This is where my strategy comes into play. So on the higher time frame, we know that it could reverse from here. So how do we find the point where it starts to go up? That's the part we need to know. Well, this is what we do. The markets always work in intervals of 4. So if we're on the 4 hour, we're going to drop to the 1 hour. We're going to check out the 1 hour. We're going to see, right? Okay, so now we're on the 1 hour, and now this is looking more clear to us. This is looking like a nice little downtrend here. So yeah, we dropped to the 1 hour, and as you can see on the 1 hour, it's actually in a downtrend, which is good. That's what we want to see, but we don't actually see a clear market structure forming. So how do we see more market structure? That's when we need to drop to an even lower time frame. And like I said, we always work in intervals of 4. So an hour divided by 4 is going to be 15 minutes. That's when we're going to drop to the 15 minute. So we're on the 15 minute now. And as we can see, there's some market structure that is starting to form. So now we actually have like a clear defined, highs and lows. And as we see, we can mark out all these highs, right? Boom, that's a high there, that's a high there, that's a high there, and this is a high there. So now what we're looking for is we want one of these highs to actually get broken. When these highs get broken, that's when we see the big push on the higher time frame. So for example, if price were to break through one of these lines, like if we saw a nice little arrow like that and kind of, sit around here for a bit, right? We saw something like this, that's when we would actually see a high time frame move. That's when we jump to the 1 hour, and that's when we would see this other leg form here on the high time frame. So that's essentially all this trade is. It's very simple. That's what we're trying to do. We're trying to make it simple. But the best way that I found to optimally enter, to get the best price possible, is to actually wait for the most optimal point. And how do we do that? Well, when price breaks the most recent lower high, all we do is we wait for price to pull back into our entry, right? And we want to enter around some supply and demand, some liquidity. And I have other videos explaining liquidity and whatnot, but basically we're looking for areas where the institutional traders are most likely to bring price back to get the best price for them and get an optimal entry. So then we can enter, somewhere over here, and we've set our stops nice and below either some market structure, or if you want to guarantee a good trade that you aren't going to get stopped out of, you can always set it at the very, very bottom. And that is going to be obviously a lower risk to reward, but a much safer trade. So if you want to, you guys can do that. I will do it for this example here. So now if we let this trade play out, as you can see, price has now broken above this red line. What do we want to see? We want to see an hour candle close. Like I said, we always work in intervals of 4. So we want to see an hour candle close above, which we do see here, right? And when we get that hour close, that is confirmation for us to know that price will continue to go higher. Now, this little pullback here has entered us in the trade, and now we're officially in the trade. And then from here, we jump back again to that 4-hour time frame, and this will kind of give us an idea of where we can exit our trade. So we could use something like this, a nice little area like that. We can even, look at this as an area of supply and demand. So let's say we wanted to do a nice 1 to 2. Now, personally, I like to use a smaller stop loss, so I would have probably set my stop somewhere around here, or even rounded off at 10, and this would be a 1 to 4 for me. But let's just say we entered down here and we made it a 1 to 2. Before we get in this trade, quick, if you want to use the same broker as me, I like to use Hanko Trade. They have spreads as low as 0 pips, and they offer up to 500 leverage. You can also open up an account with as low as $10, and they're really reliable. I personally use them, and I recommend them. Sign up with them. The link will be down in the description. If we let this trade play out, as you can see, it runs out straight into our take profit, and that'll be a nice 1 to 2 risk to reward ratio. So this is actually how I used to trade. I used to always set my stop loss below. Now the way I trade is obviously over time, trading the same strategy, you start to work out the best ways to do things. And that's why now I've learned to use smaller stop losses, and I know exactly where to set them based on market structure. That is a really simple continuation trade, right? So a lot of you say, oh, you only trade reversals, it's so hard to catch these trades. No, it's not actually. All you have to do is you go to the higher time frames and you look for these little pullbacks. And when you have these pullbacks, you jump to the lower time frames and you get a nice, more detailed picture of what's actually going on in the micro world or this lower time frame world, right? Because overall it may look like we're heading down, but if we trade the little reversal and we go to the 4-hour, we're just trading a nice continuation. That's all it is. It's a continuation of this uptrend on the higher time frame. And this can be really, really simple to do. It doesn't take a lot of work, and it's a nice, easy, simple strategy. Okay, so for those who have stuck around still, I'm going to show you this easy trading tip that will help you a lot in your trading. So this is something that I like to use in correlation with my trading strategy, and basically this is what you do. So this kind of helps me have an idea of where to take my profits or where price will reverse from. So it's a really simple trick, and it will help you in your trading a lot. And you can do it on any pair. It works a little bit on indices, works on gold, but mainly works on currency pairs. Okay, so what you want to do for this trick is you're going to jump to the higher time frames. We'll use the daily as an example. And you want to mark out the candles, the major engulfing candles of the trend. So for example, this is an engulfing candle here. An engulfing candle is when a candle swallows or engulfs or takes over the previous opposite candle. So this is a green candle, so you want a red candle engulfing the full body and the wick of the previous candle. So what you're going to do is you're just going to mark out this candle. And as you can see, price likes to interact with that area of this candle. So you see price comes up and taps into it. But yeah, what you can do is you just go ahead and you mark out all these candles. So this is a nice engulfing candle here too, right? And as you can see, price likes to react in between these zones or these candles. I could do it more right here. This is another one right here. And as you can see, price loves to interact in these areas. See, we made price go forward a little bit, and as you can see, it just bounced right off of that. This is a nice engulfing candle here. As you can see, price taps right into it, comes up, taps into it, launches off. And once again, we have another engulfing candle here. As you see, price taps into it again. So all these engulfing candles will help you know where price is likely to reverse from. And this will also help you in taking your profits. So for example, on that trade I literally just showed you, we were in this downtrend here. And as you can see, I ended up taking my profit somewhere up here. So I had my entry, it was here. my stop below, and then I had a 1 to 2. So as you can see, I took my profit right here at the top. But if I actually looked back and paid attention to previous history, that would help me realize that I could probably take my profit up here. So if I did take my profit up here, that would have given me a way better risk to reward. And especially if I had my stop loss even lower, I could have got something like a 1 to 5. So yeah, that's just a quick trick that will help you in your trading. All right guys, that should be it for the video. Thank you for watching. Please ask any questions down below.